Welcome to another episode of our weekly trade review series. This week we're going to take a look at USDCHF, which was a trade that we put out in our Telegram analysis on the beginning of the week and then actually followed up in our signals. We were able to close around 80 pips on this pair for the week. We're going to look at the higher time frame, how our overall bias was bearish, but how we actually put a long position in on the lower time frames. We'll go down to the lower time frame, specifically the 1 hour, and we'll look at the transition that took place and our first buy opportunity. We'll mark out our entry zones, followed with price action confirmation. And then also I just wanted to do a slight breakdown of lower time frame structure and sort of where we're looking for the breaks and where we're taking some action. Right here I got my whiteboard. I actually just moved to a new apartment, so I'm just getting settled in. Let's get started right now. Okay, so we're going to start off looking at the analysis that was posted in the Telegram earlier last week. Reading through, on the weekly time frame, I see the formation of a doji near a monthly key level. So we saw the formation of a doji on the weekly time frame, which signifies reversal. Overall, the SMA EMA is over the EMA, creating a bearish bias. Down to the daily, I begin to see lower lows and lower highs forming a clear downtrend. Drawing our Fibonacci from previous lower high to lower low, our first PRZ line lines up at our weekly level. So we're seeing our 38.2 line up with a weekly resistance closer to price action off of this monthly level. There is a double bottom and huge bullish engulfing candle, leading me to target a retracement to this PRZ level just mentioned. So we have two things in play right here. We recognize that overall it's a downtrend, and then we also recognize that a Fibonacci level lines up with a major key level. So right here we're finding support at another key level, and we're basically projecting it to pull back to that weekly resistance. So down to the 1 hour time frame, we can see a clear break of structure with our first pullback retest, marking out my entry zone in red. It is clear price moved off of this area with multiple confluences. However, it is still showing signs of resistance as it approaches the moving averages. So right now we're proceeding with caution, waiting for our confirmations to present themselves, waiting for the market to come to us. On our execution time frames, M15, M30, I'm waiting for a clear retest of support combined with a bullish engulfing to trigger us long using a solid RR. So we can sort of see right here, I'm looking to retest this level of support down here. We're seeing how price off of this trend line was able to find support, and then also this is our marked red zone that over and over again we're seeing 1, 2, 3, 1. So we're seeing support and resistance on this level both ways. It's a major level, so we've found support and broken above this, and now we're testing the SMA EMA. So based on that higher time frame, all I'm looking to do here is really retest. This is lower time frame structure. We're seeing like an M15 uptrend here. So this is a high that it's at. I'm really looking for a pullback and retest of this level to then trigger our long opportunities. So let's hop onto a chart and sort of check it out. So right here we're seeing the 200 EMA SMA is being tested. We have this random line that was drawn on the 1 hour time frame. Right here we can see that on the 1 hour this transition has taken place. We can mark these as lower highs right here. So the market at this point is forming this downtrend. We have this final lower high right here that it actually manages to break. So this would be the break on the lower time frame, and then the retest. So this right here is that transition that I mentioned in the intro to this video. And then from this level, we could have either taken this position really based off of the 1 hour, but I like to go down a time frame to our entry time frames, M15, M30, so that we can get a more precise entry and have a more desirable risk to reward ratio. So right now, if we knock it down a time frame, we'll go to the 30-minute. Right here, we're seeing this structure even down another time frame to get a little bit more data within this area. So now here we're on M15. We're seeing a break right here, break of resistance, and then break of structure, and a change of trend right here. So we'll play forward a few more candles and maybe see where we can get our best entry. So right now we're falling back towards these levels of support. We're finding support though at this area, and then right here is really where I entered this trade. right in this position. So obviously we had a lot of those higher time frame confirmations to have us make an aggressive entry onto this. I'm just going to mark this in yellow. And right here what we see is on this, we're on the M15. So right now on the M5 and M1, right here is a clear transition from this downtrend break of resistance here, break through the SMA EMA. That's really what I'm looking for on my entries, is I'm looking for an area with multiple confirmations, and then this final break through the SMA EMA will really trigger me to put my position on. Also have the 200 EMA here that it's respecting. And yeah, so it's really holding this level right here, and then we'll position our trades. So I'm gonna put a trade on as if I'm taking it from this level. We're gonna go up a time frame here. We're gonna keep our support down around below this monthly level, or we can even move it up a little bit higher. And then my targets that I was targeting were actually up in this weekly level. That was the 38.2 on the daily time frame, on the weekly time frame, those higher time frames. So that is what I'm looking for the market to push towards. We have our entry right here. Let's play forward a few candles. We'll actually get some candles going here. So as we play it forward, we see we just see a transition from this point here. This is some M5 structure, so lower time frame structure is really what we're seeing there with these bullish engulfings, and then we just continuing to retest this lower zone. And then at this point now I saw a price push up, so we see price push up to this area, and as we can see, it tested this resistance. So we have up here some resistance. This is what I was looking for it to retest, and then we see a bullish engulfing. So a lot of momentum is in this level. Retest, could even draw this random line right here. So we retested this line. Maybe this is a little breakout entry that you could have taken, and then here we see it come back, and then here price shoots up. So notice how price does come back one more time to retest this lower area, this random line. We do have our stops positioned in a pretty good position, giving us a lot of room to breathe. But like I said, this right here, we could even drag this over, was our key level that we were looking for it to respect on that lower time frame on M15, M30 as we build up to the 1 hour. So this was a key level that we were looking for it to respect, and it does come down to retest that. We're right where we left off, so price has now taken off about 39 pips. At this point is when I signaled for us to move our stops to 0. So I'll even take this and we'll move our stops up. So at this point our stops are going to be at 0. We're risk-free, and we're going to maintain this trade as best as we can on the lower time frames. We see here that this also can be a main level of resistance. We're testing this upper level. So this is what I was looking at while maintaining the trade, this upper level, this random line. Play forward a few candles, and you see how this is a test. So we'll go down to this lower time frame, and now at this point, what I'm really looking for this to break, where I would really exit the trade, is not this minor level that was formed here, but this more, still very minor, but in this push upwards, I would consider this a more major level of support. So we're really watching this level here to see how price reacts if it does manage to come down to that level. You see a little slight double bottom, and then now we've actually broken back into that zone to retest that random line, and then here we go. We've come down now to retest this level of support, and I noticed a ton of volume that came off of this level. We're in a little bit of a consolidation, but at the same time, we've never broken this level right here, and we can actually draw it at the median of these candles. So we had never broken this level that's now formed of support. We're going to move our support up from there to now this level. This is a more major level that we're looking for it, or I was looking for it to respect. And then here we see the retest, and then the engulfing through the MAs. That's pretty major there. At that point, I was very solid in the analysis that we were going to push upwards. Let's play out a few more candles. So we see how price comes back again off that level. And then now we start to make our way towards the upside. Now at this point we're up about 46 pips, and I will move our stops considering how significant this level is. Tested 1, 2, 3, 4 times. I'll move our stops up to this level, 97,600, and we are going to just continue to maintain our trades as this market looks to continue to push. And as we see, so this market continues to push, and it comes very close to hitting our TP. So now these more minor levels, if you want to continue to maintain, this is why we give the multiple TPs in our signals, so that when you get to those significant levels, so you can choose how to maintain these trades. We get very close to where our take profit was, pretty much like less than 2 pips away. And then at this point we moved our stops even closer, maintaining this with, you could say maintaining this with our Fibonacci tool. So we could even draw our Fibonacci from this new level, our higher low that was formed. We can move that up to here. We'll take off this previous Fibonacci. So we have this fresh Fibonacci up here. We could say if this breaks 38.2, kind of like a golden rule of thumb, that we'll get out, because that we know off the 38.2 is a more quick and rapid movement towards the upside. And if it breaks that, it will most likely continue to retest these lower PRZ levels. So we see how it retests 38.2, and then it comes down again, and then it breaks. So if you continue to maintain this, even though it hit TP, at this point you would exit this trade right at this candle right there. So right as it continues to break 38.2, you would exit, and you would still end with around 46 pips for the trade. For the total, for the top, if you got out, it would be around 71 pips, which is great. This is also depending on your entry. So this is a great trade. Let's go over now to the trading view and just take a look at how this looked. So we're just going to play it forward. We see our analysis. We see where it came to. Once again, this trade was dropped in our Telegram and given in our signals. These weekly trade reviews are going to be posted every Saturday. I look forward to the next video. See you guys next time.